Okay, we're back. Sorry about that. Okay, so if we see the numbers here again, just to as a reminder, we had a +5, a +5, a -4, and a -6. So let's say we pair the CAD with the pound, right? Pound CAD, for example, pound CAD or Aussie CAD. You see, Aussie has no number, which means it's probably zero. So Aussie CAD makes it a strong pair versus a neutral pair. So if we take a look at Aussie CAD, for example, let's go up to this chart here. Let me open up Aussie CAD. Here we go. Looking at it from the standpoint of 24th of December. Sorry, was it 14th of December? Am I right? Yes, 14th of December that was. So 14th of December, which puts us at the line right there, saying CAD is strong and Aussie is neutral, which means give me a pullback and I'm preparing to sell it. Obviously, it's seller's territory, right? Okay, that's the whole gist of, let me put the seller's territory here, right there. That's seller's territory. So on the 4 hours, we want a pullback to occur, and that pullback, you want it to be as subtle as possible. So you're seeing buyers come up. You're like, okay, here we go. Buyers coming in, pull back 50%. Buyers come up again, barely make higher highs, but rest 50%. Good. Buyers come in, slightly make higher highs, and then complete rest. Okay. If buyers come in and do complete rest, there's no higher high because this high is a faker. Right? There's no higher high. It just goes up and comes back down, doesn't it? See, from this area, goes up, comes right back down. So it's like, okay, it looks like the buyers are dead. The last test, notice there is no higher high on the last test. It's more subtle. It doesn't spike up and then back down. It's more subtle. So if you get in after that area, you have a higher chance of surviving. And the movement down, as you can see, comes down, slows down a bit, and then goes down again. So the move to take profit, even though it looks very smooth, it actually, this moment here, the 4 candles sideways, that can drive you nuts because 4 candles on a 4-hour chart means 16 hours. So that can make you start feeling like, oh, maybe it's not going to work. Maybe it's over. Maybe this, maybe that, maybe everything, right? So the smooth transition all the way down, it does not happen with a strong and a neutral pair, but it does give you a smooth takeoff from the moment you get in. So these are some of the benefits of going with a strong pair and a neutral pair. So let's go into a little bit looking at a strong pair versus a strong pair. Okay, a strong and a strong. Let's take a look at that. So a strong and a strong would be, for example, it would be CAD and New Zealand. So let's take a look at New Zealand CAD. We're gonna pair the bottom two right here. That was a +5 and a +5. They're both strong. So if I go to New Zealand CAD and take a look at those on the 14th, I'm going to go back to the daily. I'm going to start from there, and I'm going to say 14th of December. 14th of December puts us right around there, and you can see why Armo's looking at this as, well, this chart's not going anywhere. Okay, strength versus strength. Okay, very decent, easy to draw range. No higher highs, no lower lows, right? But if we go to the 4 hours, this strength versus strength does all this sort of nonsense. Take a look at this. All this stuff. This activates people to turn sellers or to turn buyers, when in reality it's like they're just going out for all the stop losses below here. They're going for all the stop losses put right above there. They're just gunning for it. They're like, okay, you know, we're gonna go after it. Now, here's an example of that. Let me show you here. So let's say you're coming in on a regular normal business day, and you see that New Zealand is strong, CAD is strong, and around the 8th or 9th, you're looking at this and you're like, oh, fantastic. Here comes the buyers right here. Okay, I'm preparing for a sell because overall we're in a downtrend. Let me put that in. Let me show you here. So overall, we seem to be in some sort of a downward movement right there. Okay, so let's say you're just looking at it like that. You're like, this closest thing I see is this little area here, or this area up here. So we're in a downtrend. We're in seller's territory, basically. The guy who started it's up here. Seller's territory. So we're looking at it on the 4 hours. We're like, okay, Seller's territory, which means keep selling. So here comes the buyers. They're going up. They pull back 50%. They go up again, and they pull back 100%. And we're like, oh yeah, that's awesome. Let's prepare for sells. But look at this sell preparation. Look how high it comes. It goes even higher. Like imagine you put your stop loss just above your recent high. This is going to spike you out. And there is a chance that this can spike you out as high as this red line. See, this is the problem when you pair up a strong pair versus a strong pair. You can't just assume the buyers are dead. They're dead on the chart for the moment. But you have to understand the world wants that currency. The world also wants your opposite currency as well, which means there is higher chances of spikes. Does that make sense? So keep that in mind. So when you're working with it, I'm not saying you can't trade this. I'm not saying trading ranges are bad. In fact, some of my students, they love ranges because they move so quickly. So ranges can be beneficial, but if you know why a range is there, if you know your strength numbers, put it to your advantage. Learn to put your stop losses a bit further when it comes to numbers like these. Now, your stop loss is no longer going to be very static, right? The static idea of, oh, what's your stop loss? 30 pips. No, out the window. What's your stop loss? Recent high, recent low. No, out the window. What's your stop loss? It depends. That's your answer now, because you flow like water. You go as the the saying, the saying as we discuss also in the motivational and daily routines is, be like a glass of water. If I put the glass of water in front of a black background, for example, that water, if you look at the glass, it looks like it's black because it looks right through and you can see the black behind it. So it looks like it's black. But then when I move the glass of water to a red background, well, it looks like it's red. But then whenever I remove the water's clear again. Whenever I remove the glass away from any of those backgrounds, clear again. So what that's basically trying to say, it's a Buddhist philosophy kind of thing, is whenever the glass representing you is in whichever environment, you adjust to that environment. But when you leave that environment, nothing sticks. You're clear as water. Nothing sticks. So you can blend in like a chameleon, no problem. But when you leave, you don't bring in all the opinions and values and cultures and all that stuff from anything. You come in neutral again. So that's what it is with trading as well. Based on the information that now that you don't have to stick to my stop loss is always 30 pips. My stop loss is always above the recent high or below the recent low. Now you adjust to the situation. Cool. So hopefully this was good. Hopefully this was good for you. So we did a strong and neutral. We did a strong and strong. Let's do a strong and weak now to show you that now strong and weaks are fun too. Okay, the ones that I used to mess up with a lot. So this has become one of my strengths now because I failed so much at it that I feel like there's no more failure I can do on it. It's like I failed so much with it. Okay, so strong versus weak. So for example, in this case, it's going to be CAD and yen, right? CAD extremely strong at a +5 out of 6, and yen -6 out of 6. That's like extremely weak. So let's pair those two together, CAD yen, and let's go take a look at CAD yen. Let's take a look at that example. Boom, boom, boom. Here we go. Daily charts. Let's put up the line at 14th of December. Boom, right there. This is saying purely the market's going this way. Why? CAD is strong, which means chart goes up, and yen is weak, which means chart also goes up. So both of the currency pairs are pointing upwards at their both with forces on both ends. Forces coming in from CAD and forces coming in from the Japanese economy. Everything is just forcing this chart upwards. So look at the pullbacks coming in. Very shallow, right? Very shallow pullbacks. Very shallow. So let's take a look at this shallow pullback. This wonderful shallow pullback. Here we go. Here comes the problems with these pairs that are strong and weak. So for you to be a buyer in this chart, it's saying give me a sell and I will buy it. Okay, so we need sellers first. Here comes a seller. Okay, seller coming in, pulls back a little bit. Seller coming in, pulls back a bit. Okay, now this may, to some people, say, well, I think that was a pullback a little bit there, so the seller must be dead. That can be an idea. But if you don't see it as dead and it's still coming down, you might see it as dead somewhere here, saying, okay, that's dead. Prepare for buys. Stop losses, recent low. This thing gets you. This thing gets you. How much does it get you? How much spike is that going to happen determines on the big boys' understanding of how many people are confident that it's a sell. Confidence, remember, comes from this. Anything spiky, anything large candles. Large candles builds confidence for the traders to follow it like sheep. Okay? So if you want traders in the market to start following the market in a certain way, in an uptrend, give them strong red candles and they will follow it like sheep to start selling. Because first they always have an idea that it can't go up forever. So the moment a strong red candle comes in, they're like, I knew it. It validates their opinion. If it's just a small red candle, they're like, let's see, let's see, let's see. A big red candle says, I knew it. You know, that ego just kicks in and says, God, I'm good. You know, so this is actually good. You know, the fact that trading is such a psychological game is just fantastic. Because I don't look at it as profit and loss. I look at it like money comes and money goes, you know, in life for everybody. But the fact that for you to become a trader, you have to become one with who you are. And that's just incredible that this journey becomes easier. And as you get better and better in this journey, you know more about yourself. You know more about yourself and you're like, oh my God, I can't believe I do that. Is my real life like that too? Am I really that focused on what I really think and believe and reality turns up to be different? You know what I mean? So it's just incredible. It's a very humbling experience to be a trader. And it also is a strong ego point too, because you feel like you're the smartest person in the world at the same time. So it's wonderful and humbling at the same time. So enjoy it. We'll catch up next week. We're going to go into some more topics like leading pair and lagging pair, and then we're going to go into examples because we need to go into examples of, okay, once this information happens, how would we prepare? How would we start gearing up and stuff like that? So practice this information for this week, and we'll catch up next week, and we'll make sure we go dive into it a little bit stronger. Cheers.